Thank you. Hi, everyone. Good to have you with us today. My name is Kristen. I'm the co-founder and CEO of Rockrose Executive Search. I spent the last 12 years in the headhunting industry. I work with banks, corporate startups, and most recently, fintech, as well as Web3. So here we have a very panel of very experienced professionals. I'll let them to introduce themselves. So maybe we'll start with Priscilla.
Thank you. So Priscilla Adams, I work for Bullish, which is an institutionally focused, regulated crypto exchange. We've also done over 500 billion in traded volume, just to give a size for scale if you're not familiar. And in my spare time, I am also the co-chair of the Web3 and Blockchain Committee with the FinTech Association of Hong Kong. So looking forward to speaking with you today.
Hi, everyone. Thank you, Andrew, for the introduction earlier. I am the founder and MD of FinStep Asia. We are a venture builder focused on fintech and crypto. We've also done a lot of work on policy and benchmarking of regulations and different markets. I was until recently also working for the Dubai regulator, VARA, as looking at market risk and assurance, as well as grandfathering of legacy firms. Glad to be here, and I want to give a shout out to Bobby and Ivan for a tremendous work in bringing all of us together. Very high quality event, and it takes a lot of effort, so a big shout out to them. Thank you.
Hi everyone, my name is Abel Seow. I'm a director at BitGo. For those of you who don't know, BitGo is the largest independent provider of custody and wallets. We serve everything across from governments, sovereign wealth funds, banks, right across to exchanges, foundations, and everything else in between. I've been with the firm now for 2 years, was previously a private banker, still recovering from it, and obviously delighted to be here to share our insights and thoughts about the landscape. Thank you.
Hi, I'm Padraig Walsh, a lawyer. I lead the TMT practice at Tanner DeWitt. Gosh, I almost forgot my firm's name. In that, I also do a lot of work around fintech, digital assets, Web3, media. So back to you, Kristen.
Thank you, everyone. We have a panelist which is very experienced. Some came from banks, some from law firm, and myself as well. I used to hire for banks, and I know banking environment is very regulated. In crypto or Web3, probably not as the same. So the industry has been through 4 bull cycles, right? Bitcoin has been around for more than 15 years right now. And I remember in 2021, that year, regulations wasn't really a hot topic at all in this industry. But things have changed since FTX collapsed. And so now I'm really curious. So how do you guys find, in terms of the regulatory landscape for cryptocurrency and Web3 evolve globally? This is for everyone, so maybe Padraig, I'll start with you.
Sure, yes. It's funny you mentioned 4 years ago, because one of the things when I was listening to some of the content yesterday, a lot of the comments from the panel were about wanting to be regulated, embracing it, looking for clarity, and it brought me back to 4 years ago, 5 years ago, where at that time, if you mentioned the word or the phrase regulatory arbitrage, what it usually meant was that businesses were looking to take the path of least regulation so they could continue to operate with a degree of freedom. Whereas now, where if you said regulatory arbitrage, what people really mean is that they're looking for the jurisdiction of most regulatory certainty and trending towards that, because that's the direction of travel. Now, I think what's changed in between time, and it's probably going to be a theme of this panel, is on the one hand, you've regulators who have stepped up to the plate, listened more to what feedback is being given, and responded with movement in respect of clarity and regulation. But you also have the good players within the industry who are moving in step or even in advance of that step in terms of embracing regulation and getting on with it. So that's where I think the trend is, that's where I think the evolution is.
Very interesting. Abel?
Yeah, it's a really good point that you brought up. I guess in today's day and age, in a post-FTX world, and in a world post a lot of these collapses, the reception now from regulators to work with industry is commendable. And we have a lot of sympathy for them. It's not an easy job at the end of the day. You know, in the post-FTX world, in the post-Terra Luna world, I think it's fair to say that market structure is more important than ever. From our point of view, the separation of custody and trade could not be more important for clients. No longer do you want to have a situation where you just send money to an exchange and you hope for the best. Clients are now looking at the fine print, looking at the detail as to what goes on behind the scenes operationally and from a regulatory point of view as well. And in Asia specifically, we see that different regulatory bodies are moving at different pace to get things right. And that's really encouraging compared to 3-4 years ago. And it's going to be exciting this year as well to see a lot more of the changes that are going to be coming up.
Exciting.
Thanks. A disclaimer, these views are personally mine and maybe FinStep's, but not of any of my previous employers. When we look at regulatory evolution, right, my element on this is threefold. The first thing you got to be aware of is technology has been evolving, improving at a pretty breakneck speed in the recent past, right? You get that tipping point, and AI is a classic example of how now with Gen I, you've just seen this whole spike of everything AI and everyone's talking about it. In a similar way, and if we think back 15 years, around 15 years when Bitcoin was first launched, and you look at the size of each block and the speed at which you could do transactions versus what can be accomplished here, it's taken a long time. Now, what I mean by, what I'm intending to talk about here is a lot of regulators are typically a few years behind because earlier it used to be a conversation of being very prescriptive on what you can or cannot do, right? Which meant you need to understand everything very well because it's law. If you make a mistake, people could go to jail because it can be criminal activity if related to financial services. A lot of people here have probably been responsible officers. So you have to keep in mind the regulators need time to set up things. The second point to talk about is the evolution of fintech as such, right? So we had a similar conversation 7 years ago. I feel like an old man talking about those were the days, and we touched upon it before. But long story short, you had a similar conversation where fintech companies were like, oh, these regulations are kicking in, it's very difficult for us. But regulators were behind the curve because it was still very prescriptive. But the FCA kind of changed that in late 20s to switch towards principle-based, right? And now you can see most of the regulators are catching up. And when you look at financial services in particular, or crypto or virtual assets applied to that, they are looking at the principles of, are you offering a financial services product, right? Or how is that, rather than going too detailed in terms of prescriptive, so you can change rules at a faster pace and keep up to breast on that. So I think that's a very important element of the evolution that has happened and why it takes a little while more for regulators to catch up. And to do that, so some conservative regulators will then decide to say, we won't allow such an activity till we understand it well, right? Hong Kong, to a certain extent, when it came to fintech and digital assets, have been very pragmatic, allowed a large amount of it to run as long as there was no large money laundering or criminal activities going on, which was dealt with separately. They engaged with the ecosystem to understand, and now you can see the results of it in pretty well-balanced regulations across the curve for most things crypto. So, thank you.
Thank you.
So I think the fun thing about being the fourth to speak is I have to come up with something new to answer the same question. But I'd say, to echo and kind of organize the thoughts of what my fellow panelists have said, I see regulation and the landscape going in virtual assets in kind of two directions. On the one hand, where you have the regulation that is responding to some of the big failures like FTX, you see these responses and you see a certain level of maturity coming in. As Kristen was saying, Bitcoin's been around for a while now. We've been talking about regulation and regulatory arbitrage for a while. We're now seeing second generation of some of these regulations coming to play, right? If you think about the notorious travel rule with FATF, there's now an additional FATF consultation paper out now about what the next version of the travel rule is going to look like. And so I think you've seen a rapid deployment of regulation in the market integrity space, the conduct space, based off of FTX, and now we're seeing that next generation. That's what I view as being kind of similar to TradFi and the boring side of regulation, if I might go so far as to say that. What I find more interesting is the other side, and that's where we're now seeing regulation as market making and contributing to market creation, right? So where a regulator gives the green light or the thumbs up for something relatively new, maybe they sandbox it. They say, we don't know exactly how comfortable we're going to be with this, but we're going to give it a go. Then what we see is a huge market response and a huge, I think, opportunity for future adoption, whether that's in the spot ETFs that we've seen recently, whether if it's in new types of real-world assets or RWAs, and there's just a lot of potential now in the future.
Interesting. It never crossed my mind that regulations could be in the position of market creation. That's a very interesting thought. Priscilla, given your experience as a group compliance director at Bullish, I'm sure you've seen regulation in different countries. Like how would you contrast, or what are the differences between some of the regulations across the different countries?
Sure.
Maybe just one example.
So I think it's also baseline to understand is some jurisdictions have just flat out said, we don't want virtual assets here, or they're trying to control it for a number of different reasons, whether it's because of inflationary pressure on their own currency, whether it's they just don't want something competing with traditional financial markets. So that's one bucket. But where regulators have said, we do want to invite virtual assets here, what I find really interesting is if I compare even, say, since we're in Asia, Hong Kong and Singapore, that the regulators, in my view, are taking an approach of what is the type of business that we want to have, and that's really a driving force in the type of regulation being proposed. So even if you look at Hong Kong, traditional financial market, big capital markets, plus asset management, right? If you look at how that's panned out in the regulation here, whether it's for the virtual assets service for providers, the VATPs, whether it's who can access stable coins, who can access STOs, which we'll get into later. There's a lot more variety, and I think that some of that comes from the root of the history of the traditional financial market here. If you put that overlay onto Singapore and say, well, Singapore hasn't had the same amount of capital market traction traditionally in size in comparison to Hong Kong, you see a much bigger push on infrastructure, on how to connect traditional finance and banks with virtual assets, and additionally on what is going to support the development of wealth and asset management for professional investors.
Great tip. So recently there were many debates whether a particular token should be classified as a security token. Even the most recent one, we saw SEC looking to classify Ethereum as a security. So how are security tokens and utility tokens classified under different jurisdiction securities laws? Padraig, perhaps I'll let you lead this one.
Let me speak to Hong Kong, at least in that respect. So if you look at security tokens and utility tokens, wouldn't it be nice if the laws and the regulations actually use those terms? That might help in terms of a common understanding. In Hong Kong, you've got four categories. You've got digital securities, which is roughly what a security token is. Tokenized securities, which is a subset of digital securities. Non-security virtual assets, and then the rest. So that's how it's classified, and you kind of work through those. So the reason for the distinction between digital securities and, say, tokenized securities, coming back to the point that was made, is tokenized securities, which is a traditional security with a tokenization wrapper, that's what's got the regulatory blessing at the moment. So in that sense of moving forward with something and telling the market, this is what you can do, that's an example of where you use the classification in the language in the regulation to be able to give a signal to what is green-lit in terms of the path forward that the regulators will look at. But and Musheer will probably know this better than I would. I'm not sure of any other jurisdiction that uses the phrase virtual assets. It's something that is certainly used in Hong Kong, but not in many other places. But Musheer was already giving an example of another one, so I'll pass to Musheer.
I'll take the pass. Thanks. I think I was also thinking when I said we do FinStep Asia does crypto, and I was thinking, there's the term crypto assets, there's digital assets. Digital assets is the most confusing, by the way. So I think virtual assets kicked in, maybe due to the FATF using virtual assets. You have some others using crypto assets. FSB, and others. So you get a mix of these. That's the main problem. But in terms of the classification, etc., I mean, if you take the SEC's case in the US, right, it all boils down to, doesn't matter what you call it, it's what does it do, right? And that's where we got to stop thinking about tags and names or titles, and maybe is the right phrase, right? Titles of what they're, but look at what they do. And that's the most important thing in when you're evaluating regulations. Are you, somebody says, oh, we are providing staking services. So when you take staking services, are you providing the tech for somebody who's licensed to be doing that staking services, or are you doing it yourself, right? And in crypto, that gets very technical in terms of who's actually doing it. Whereas in traditional finance, in the large case, the person, the institution that's licensed is typically responsible for it, but the actuality of conducting the transaction is digital, and that may be a technology firm. So sometimes that gets stuck. In some regulators, you're like, no, you are doing that because you're the end executor, right? But that's changing now. I see a lot more pragmatism in terms of not bothering so much about the tags. There is the stable coins broadly, but if it's securities, if there's the properties of securities, that's where the SEC is heading towards. That is where the challenge becomes, because quite a bit of crypto assets can have different properties that they execute, and that's where the most challenge becomes, not as clear-cut as in traditional finance, where you can say, this is a bond, so it's a security, this is an equity, it's a security, this is not a security. In crypto, you can have dual roles that are being executed. So, yeah.
So users could definitely buy and sell, trade tokens on cryptocurrency exchange, we call SEX, or the decentralized exchange, DEX. So Abel, being in the custody area, do you see any differences or what are the implications for users in terms of regulatory,
Yeah, it's a good point. I guess where we are today is where a lot of the regulators have come out with rules and regulations to capture exchanges. And it's interesting, at least in the Asian context, how the differences in countries and regulators have approached the sort of the thinking around exchanges, right? Priscilla talked about Singapore and Hong Kong, but in markets like Japan, they've actually imposed rules and regulations from very early on. They need something like 95% of your assets in cold wallets. And because of that regulation from before, because of what happened with FTX Japan was the first exchange among the FTX entities to return funds to users because their assets were clearly segregated. In the case of Korea, the regulators there have taken a very different approach as well, where if you want to have fiat to crypto on and off-ramp capabilities, you must partner with a local banking partner. And that means that today, only 5 exchanges have the ability to do that. And if you contrast that to, say, Indonesia, again, the regulators there have imposed a very different structure. Right? You have a national clearinghouse, you have a national exchange, you have a national custodian, which is very much what you see in TradFi, and the regulators there trying to bring across those structures there too. So whether we agree with it or not, I think the industry is certainly moving in that direction, where more regulation, I think we can agree, is better for the industry over the long term.
Thank you. And Priscilla, could you touch on the implications or the regulatory approaches towards DEX a little bit more?
I mean, how many of us here have heard stories of a friend, colleague, someone who, in the early wild west days of crypto, put their money on an exchange and lost it? Right, I was having dinner with an old friend, and someone at the table was like, I only lost 100,000 US. I'm like, well, lucky you, that's still a lot of money to me. But in any case, this is the risk that you run in dealing with centralized exchanges. While some of them can get you the best rate, I think whenever, from a compliance professional's viewpoint, when I see money coming through a centralized exchange, for me, it's kind of, what are you doing? You don't know who's on the other side. And there's so much risk that you're taking on as a user, right? Whether you are inadvertently getting tainted assets that then you try to put on to a centralized exchange, and good luck to you, because no one's going to take it if it's come from a decentralized exchange. And on the other hand, if you've put your money on a DEX, or your assets on a DEX, then they could very easily and quickly vanish. What I do see happening, though, and very interesting, is I don't know if everyone in the crowd is familiar with IOSCO, but IOSCO is this large international body that focuses on securities regulation. And Hong Kong is very well represented at IOSCO. And what we see happen here is whenever IOSCO passes something, it gets adopted into local Hong Kong regulation quite quickly. Last year, IOSCO had its regulation on centralized exchanges. That's now by and large been adopted. And then in October, they issued a consultation paper on how to regulate decentralized exchanges. And I think this is quite telling.
Do you know
Sorry?
about that?
What?
Do you know about that? That came up.
Yeah, so I mean, I was working on it with the FinTech Association of Hong Kong, and you're looking at, okay, they are looking at how can we hold DAOs accountable? How can we find founders? How can we find people where if something goes wrong, consumers get their assets back, right? That's the main concern, or one of the main concerns with the regulation. And I think the days are numbered where DEXs will be able to really operate in this kind of gray area, because once IOSCO sinks its teeth in, it's usually just a matter of time.
I would love to go deeper on that topic, but I think we are short of time.
The clock is ticking.
So next question. STO or RWA's tokenization been the hottest topic lately. So what are the challenges and opportunities for mainstream adoption of cryptocurrencies in light of the regulatory landscape? So I'll love 2 answers on opportunities and 2 on challenges. Anyone could start first.
In terms of opportunities which have an implied challenge within them,
Leave it to the lawyer.
I am a lawyer, yes. What I tend to hear most is to have more product available to retail, where retail can engage with intermediaries in a way that they're accustomed to, in a process that they're accustomed to, and with reputation attached. That's kind of where the real-world adoption will happen, which is why you can see that there's massive opportunity, but massive challenge also.
So we're still looking at STOs or just broadly?
Broadly.
Broadly, okay. Just a quick audience poll, right? Just exercise. How many of you think of crypto broadly as play money, play tokens, like a gaming tokens, everything? How many of you think of that? Just raise your hands if you think it's play money, right? Okay, just a couple of hands. How many of you think of crypto as assets, right? Right?
More hands.
So when we look at this, the reason I did this is just to kind of highlight the challenge that is faced when somebody looks at anything as an asset. Then there's an attachment, there's a value, there's an effort, there's a loss felt more deeply. If I lose my Temple Run points on my phone, for those who remember Temple Run, you keep running, just clicking away, I don't mind because it's just a game to a large extent, right? But if I lose my NFTs or I lose some of my crypto, I'm very concerned, right? So with that, the biggest challenge is investor protection in a world where people don't want too many regulations. They're like the DEX's example is a classic example. I want my money, I want to transfer to whoever I want, right? But when you lose your money, the first person you go to is a regulator and saying, hey, I lost my money, I got scammed. Did you do your due diligence? Did you check the companies? There's none of that. So there's a lot of pressure, and that's the biggest challenge is being able to give investor protection from a securities or an STO's perspective. While the biggest opportunity is potentially providing liquidity to the market when it comes to large-scale assets. This is going to be a small number of assets. We have people speaking about it, but like large properties, which cost $1 million here to buy, or you don't think of investing if you don't have $1 million in Hong Kong, like US dollars, in property. But now, if you could put in 100,000, which a lot of people could, as an investment, you may consider it. So that brings in a little more liquidity and an opportunity for wealth creation, but that's a limited number of assets. The broader number of tokenization does not solve an illiquidity problem. If a product has been illiquid, generally tokenizing it is not going to make it more liquid, it's just going to remain the same.
Priscilla?
So I'll look at kind of the challenge with it. I think that when we look at what happened with the big rush into tokenization over the past 12 months, one of the, I think the number was more than 800 million in tokenized treasuries were poured in 2023. And one of the main drivers of that was the fact that treasuries were creating a better return than other projects in crypto and Web3. So pure return on investment strategy. And as we see, now we're in a bull run, so we're seeing this momentum gaining. We will probably see other projects coming up where the returns are going to end up beating treasuries. Who knows how long the treasury rate's going to remain where it is. And the challenge is, how can the market prove itself as an asset class, as a reliable asset class, and still continue to have that run and attract new investors into it?
Abel.
Well, I guess there's nothing that hasn't been covered already. But at least from our point of view, what's interesting to see is the waves and interest that has come alongside the market's maturity in this space. Obviously, in the last 12, 18 months, we've seen a lot of interest from partners, from clients with tokenized treasuries and what we can do over there for them. So firms like Open Eden, Maple Finance, Ondo Finance, etc., who we work very closely with. And I guess it's going to be exciting to see in this market, in this bull market, over the coming months and potentially years, what the next wave will be. Right?
So on tokenization, seems like that gained a lot of interest. How do you think tokenization fit into the existing regulatory framework, and what are the potential gaps or conflicts? Padraig?
Tokenization in respect of tokenization of real-world assets or financial assets, or?
Real-world assets.
Okay. I think I can tell you within Hong Kong, if you're looking to tokenize real-world assets, it's going to fall into that broader area of digital securities that the SFC is not yet fully sure about. So it's going to be, it's still possible to do, but your investor class, your target investors are going to be professional investors, and the product itself is going to be classified as a complex financial product. What that means is that it's going to change the price point in respect of doing, conducting the exercise in that way. And you have, if you're the person who's the promoter of the project, you have a choice between, doing something in a traditional form of capital raise or a traditional form of offering at a lower price point, or something that's funky, a little bit creative, but got a much higher kind of process associated to it and complexity associated to it. So it's not the ideal path forward at the moment, but it is something that in terms of regulatory trends, in time you circle around and the market will be ready and you move forward with it then.
Okay, last question for all the panels here is about Hong Kong. So what is Hong Kong's stance on virtual assets, and why should Web3 projects seriously consider building here? Anyone? Priscilla?
Okay, I guess we'll go down the line this way. I think by and large, we've seen, when I joined Bullish, there was this question of, China had just clamped down on crypto, and there was a lack of regulatory uncertainty in Hong Kong. And what we've seen is kind of a reversal of that, with a lot of clarity being given with the amount of regulation that has been put out there, especially if you're in the DeFi space, right? I think it is, if you're looking at like an exchange perspective or a DeFi perspective and you're touching financial services, it's open as long as you can pay enough to be compliant. And what I mean is, by paying enough, it's not bribing someone, don't misinterpret me, but it's having the infrastructure in place to meet the regulatory hurdles, which are not insignificant. I think the Web3 is an interesting space, and it's also, you have talent here, you have interest, and Hong Kong for me is also a very big part of the China outbound story, and we'll see how that develops over the next few years.
Thank you.
Yeah, my love for Hong Kong is well known, so it's going to be a very biased opinion here, disclaimer. But long story short, three things, right? Number one, we are talking about one of the OG cities of crypto, right? You've always had Bitcoin, I remember a photograph of the top 8 Bitcoin holders in 2013 sitting on a stage for a Bitcoin Association event, right, in Hong Kong. So people understand, and I've been in this space for a long time, so fluff or bullshit, pardon my language, doesn't really work that well in Hong Kong, but it's a good thing if you have real good projects, people understand it. So the understanding of crypto is very strong here. Number 2, they're being one of the world's largest financial centers and currently fighting with Singapore as the top 1 for Asia and top 3 in the world. We are having a depth of talent that understands financial services very, very well, right? So if you have an interesting project and you want to scale it using financial services rails or integrated with that, you have very good policies and talent and expertise. Number 3 is regulators. They've been very pragmatic. Hong Kong was one of the first places to actually designate Bitcoin officially, as a virtual commodity almost 10 years ago. HKMA did that. Also here, they're able to distinguish between serious financial assets, where we've covered most of crypto, but like NFTs, for example, right? And the broader metaverse and others are currently not in a regulated space unless you are doing large regulated activities, whereas in certain countries, that is also regulated, right? And the government and the policymakers are putting in a lot of effort to attract people to come to Hong Kong and engage in a way that, doing professionally and for the growth. So these 3 things, I think, are a big selling point for Hong Kong. Yeah, thank you.
I guess as the only non-local Hong Kong panelist, I could offer outsider sort of point of view as well.
That would be a good perspective.
Yeah, I think, as Priscilla mentioned just now, Hong Kong had that lead already, right, as a world-leading financial center. And so from the outside, it just makes sense if you can mirror some of those rules and regulations within crypto to capture some of that flow. Hong Kong really should, to continue to be a world leader in that space as well. I think where it becomes very interesting for us is that when we engage with regulators, like the Hong Kong regulators, they very quickly realize they were on the same team as them. Right? Consumer protection, check. With their security of assets, check. With their regulatory compliance, check. With there as well. And therefore, we hope that the engagements that the HKMA, the HK SEC has put forward, the consultations that they put forward, while very aggressive, while very forward-looking, certainly sets the pace and the tone for the rest of the region to follow and tag along. So in that sense, from the outside looking in, super bullish on Hong Kong, excited to see what's going to happen next, and excited to be part of the journey as well.
Fantastic. And last one, Padraig.
Consistency, certainty, government support. Who would have thought you'd have said that about a crypto world? But that's actually what Hong Kong has. It has consistency of approach. Recently I looked back in relation to IOSCO papers and just international developments and matched them against what was happening in Hong Kong. And if you look at the way that rules and regs have opened up in Hong Kong, they haven't opened broadly and clamped down. It's been a gradual education and opening up broader, very consistent, very pragmatic, very clear, and with a different time horizon to the industry, but something that you can build a business around. You know that you're in a stable environment. And the government policy helps enormously. You have a government that is helping in respect of attracting events such as this, that is making sure that there is financing available for projects that are bubbling up, that is supporting an ecosystem that will support Hong Kong being a Web3 hub. So these are the things why, and that's not just necessarily in a regulated space, it's also in respect of projects that don't need regulation, don't need licenses or anything of that nature, because they can plug into a community. And Hong Kong has a very vibrant community. So if you put all of that through together, there are many reasons why Hong Kong would be a favorable place.
Thank you, everyone. That's it for our panel today.
I want to thank Kirsten for putting up the panel together and all the questions. Thank you, Kirsten.
Thank you.